Good afternoon, everybody. Thank you for joining me for another video. You could have been anywhere in the world, but you're here with me, and I appreciate it. Gonna try and make this a quick video today. There's a few things that I want to talk about, so let's go ahead and get right into it. So, over the course of the last couple of days, apparently news of India reportedly proposing a cryptocurrency ban penalizing miners and traders has rattled the markets, causing us to go from about 60,000 just under 61,000 to about at our absolute lowest $53,000. I'll be honest, this news kind of has me a bit befuddled, if you will, because India, not being the major player that they are not, doesn't really control what the market does, meaning they don't participate enough to actually drive markets. So initially looking at this, what I originally thought was that this was probably people in other countries getting word of this information and trying to get out of the markets before fears that other people within other markets would be selling their crypto. And I'll be honest, guys, I see crypto prices like this and, it makes me feel good. I mean, short term, it makes me feel good because long term, I don't think anything has changed with the fundamentals of Bitcoin, really. So, when we dip down to 53 after coming off a high of 60,000 or so, 62,000. I just look at it as a great opportunity to buy more, and that's exactly what I've been doing. I've been spending a lot of time actually buying and trading within the chop and doing a pretty good job of it. So, no, it's great. Volatility leads to opportunities in the marketplaces if you know where to look and if you know where to take advantage of that. And then you've had a pretty decent day. But if you're not fairly experienced in trading these choppy markets, it's usually best to stay out of them, as you probably will get wrecked. But yeah, I mean, this is something that I find interesting. India is not this country that wealth is found in the streets and the streets are paved with gold. They're an area where they need all the help that they can get. India and Saudi Arabia have, on average, the youngest citizens, and I've always said it their median age or their average age is about 25. And I've always said that it's members in this age demographic that for the last 10 to 12 years have been hit the hardest. Two major economic recessions, a pandemic, and, the generation that is just finding it a bit hard to get a foothold. And it's probably safe to bet that a lot of these millennials, if you will, were probably looking at crypto as being a decent stepping stone that they would need. So for India, for the government of India to come out and say that they're going to propose a cryptocurrency ban, penalizing miners and traders just to kind of put some fear in the markets, that's a cheap move. And honestly, it's not respectable. My sentiments are the same as they've always been. If you're in India and some way you can get your hands on crypto, get it. Just keep it off the exchanges, keep it off your phone, get a hardware wallet if you can. And that way you really won't have to worry about what the government says, because anywhere that you have that hardware wallet, you're going to have access to your crypto. So sometimes there's a benefit to going against the grain. Basically what it basically states is instead the bill would give holders of cryptocurrencies up to 6 months to liquidate their holdings. And again, if you've been paying attention to the crypto markets or this channel, we've covered this story before. I just think it's funny that it is actually kind of resurfacing. So I think that kind of tells us what we need to know about the Indian government. This is probably the 5th or 6th time that they've kind of gone back and forth on their stake of cryptocurrencies. Next up, on CoinMarketCap, apparently PancakeSwap, Cream Finance, suffers a DNS attack, and it was actually the homepage of these DeFi exchanges was urging users to go to a fictitious website where they were taking advantage of certain wallets. So again, if you've got wallets that you use for a lot of these DeFi exchanges, that if you're using MetaMask, there's a feature, if you will, that prevents you from having to reconnect your wallet each time that you connect to the website. So basically what we have here is a tweet made by DeFi protocols. Cream Finance and PancakeSwap reported their DNS had been compromised, leading to a pop-up on the website asking users their seed phrase as a precaution of using the DeFi application. Now, anyone that's in this, that you don't ever give anyone your seed phrase. So hopefully, not too many people fell victim to that. But yeah, I mean, it's quite a new type of attack that I haven't seen, but that hackers are trying to use. And that's kind of one more instance that lets you know that we are actually, in fact, in a bull market. People are getting creative now. So I think a lot of times if you pair that with, the India news, all of this has the makings to rattle the markets. And that's probably just one more reasons why, you started to see the markets play out the way that they have. Right now, we're on a little bit of a rebound here. Like I said, our absolute lowest, we're at about 53 roughly. So we've recovered about $3,000 or so. Next up, this is what I really want to talk about. Apparently tomorrow on March 17th, there is going to be I don't want to say a huge, but a lot of people are going to be paying attention to it, an announcement from the Fed. Basically, they've got to figure out, make the announcement if they're going to raise interest rates or if they're not going to raise interest rates. So let's take a look at how this affects Bitcoin in general. So one of the main fundamentals of Bitcoin is the fact that, cash is inflationary. Cash today is going to be worth less tomorrow than it is today. That's just how it is by nature. However, in the short term, if the Fed comes out tomorrow and they actually state that they are going to be, in fact, increasing interest rates to, ward off inflation, well, that could be seen as a negative sign for Bitcoin and its fundamentals. Long term, maybe not so much, at least in the short term, I definitely think it could. However, if the Fed decides that they do not want to do anything to, raise interest rates, well, how could that potentially have an effect on the markets? Well, we know that when money is cheap, businesses borrow money to grow and expand their companies. We also know that when the money is cheap, interest rates are low, and we're printing it like we are, that's a strong case to actually have inflation show up. Now, if you're invested in cryptocurrency, you probably want the latter to happen rather than the former, because if in fact the Fed does not make the announcement to raise interest rates, I think Bitcoin is going to surge to, I don't want to say the great heights, but we're definitely going to see an uptick in the market because more people will continue to move over to Bitcoin to hedge inflation. That is definitely going to come. So we need to keep our eyes out to what Jerome Powell and the Fed is going to say tomorrow. Just take a little bit of an excerpt here from the article. It says, after ending the previous session firmly positive, the U.S. stock index have turned into a mixed performance on the trading day on Tuesday. While the tech-heavy NASDAQ edged higher, the Dow and S&P pulled back, closing on their highs. The NASDAQ gave back around 1.5% or just 1.2%, ending at 11.86 points or 0.1%. Meanwhile, the Dow fell 127 points today. So, we're seeing the Dow kind of go through these instances where it does well, then it sells off, it does well, it sells off, and, there's a lot of uncertainty in the markets now. So tomorrow is going to be definitely a very important day to see what exactly the Fed says about the interest rates. Personally, because I hold crypto, I want every advantage to go to the crypto markets. So tomorrow I'll be hoping for the Federal Reserve to hold off on raising interest rates, because again, that's something that's, at least in the short term, very, very bullish for Bitcoin. And again, I get it. It's probably very, very selfish of me, but you got to pick a side. So we'll tune in tomorrow. We'll see what they have to report. Economists have expected the retail sales to dip by 2.5% compared to 5.3% spike originally reported for the previous month. Excluding a drop in auto sales, retail sales still tumbled by 2.7% in February after skyrocketing by 8.3%. So again, if sales are down and the money becomes more expensive, we may not actually get the economic recovery in terms of jobs that we're looking for, because again, most times when money is cheap, companies will use that money to grow and expand their business, tooling, new resources, or even using that money to grow and expand by hiring people. So tomorrow's going to be a very important day. You can kind of keep an eye on that. CNBC, MSNBC, any major news outlet's probably going to carry it. Let me know what you guys think is going to happen tomorrow in the comment section below. Do you think they will make the announcement to raise interest rates? Do you think they will keep interest rates where they are? And if they do you think that could be a very bullish scenario for Bitcoin? I do. I want to thank you all for tuning in to this shorter than normal video. Pertinent information, wanted to get out to you without spending too much time on it. I'll see you guys in the next one. I appreciate your time. Peace.